Hello and welcome to Moementum's investing lessons. By the end of this video, you'll learn what diversification is, its benefits and limitations, how to diversify your investments, Warren Buffett's advice on index funds, and several recommendations for diversification options. So let's get started. What is diversification? Diversification is a strategy that mixes a variety of investments within a portfolio to lower your risk. The rationale is that over the long term, a diversified portfolio consisting of various assets can result in more consistent growth than individual assets alone. To help illustrate diversification, let us review a more common example. Imagine you go to a restaurant for the first time and would like to buy a pizza. They have various options to choose from: Pepperoni, Hawaiian, Neapolitan, or Sicilian, but you're not sure which one would taste nicer. So instead, you ask the chef to make a mixed pizza, where each slice is a different kind. Yumm! That's called diversification, and each slice of the pizza represents a different asset class, such as a stock, bond, real estate, cash, and many more. But what are the benefits of diversification? Among the benefits of diversification include managing risk, preserving your capital, access to different assets, and the possibility of higher long-term returns. As for the limitations of diversification, we could point out to limited short-term gains, as you might miss out on significant short-term gains if you could pick one winning stock and bet all your money on it. It can also be difficult to manage if you decide to buy individual company stocks. There is also a potential for higher fees if you buy many different stocks, particularly through brokerage firms where they charge you a fee each time that you buy the stocks. And lastly, it can cause increased risk without a strategy if you're just blindly investing everything for the sake of diversifying. Now, how to diversify your investments? Let's get into it. For people looking to build a diversified portfolio, an initial group of about 10 assets, including individual stocks, index funds, bonds, real estate, mutual fund, exchange-traded funds, also known as ETFs, and even cash, is usually considered a solid setup. Within your stocks, you can also try to have a mixture of different company sizes, regions, and sectors. When it comes to diversification, Jim Cramer, one of the renowned investors and the host of the show Mad Money, thinks that a diversified portfolio of 5 to 10 stocks is a good place to be. But according to Jim Cramer, the homework is key. For the investors who do not have the time to do their research, exchange-traded funds, ETFs, tend to be a very popular way to automatically build in diversification while reducing your risks and costs. Because ETFs let you to buy a wide variety of stocks and assets in one bundle. As a result, you get exposure to the wide market. Plus, ETFs have significantly lower costs, so you get to participate in the stock market at a fraction of the price. ETFs are getting more and more common as a great strategy for diversification. In fact, Warren Buffett, one of the most iconic and successful investors of our time, has recommended index funds as a good investing strategy for most investors. In his 2016 Berkshire Hathaway annual shareholder letter, Buffett recommended a low-cost S&P 500 index fund. As Buffett writes, investors on average and over time will do better with a low-cost index fund than with a group of funds. Both large and small investors should stick with low-cost index funds. Lastly, here are some recommendations for diversification. Here we have a list of index funds and exchange-traded funds for you to consider for a diversified investing strategy. There you have it, folks. I hope this video was beneficial and you learned something of value from it. If you enjoyed this video, please like it and don't forget to join Moementum channel. Here on Moementum channel, we post weekly videos about investing, finances, and personal development. Let us know in the comment section down below, what's your approach to diversification? We would love to hear from you. Have a great day.